Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be reviewing the mid-year miner growth targets, as today is July 1st. Happy Canada Day to any of our Canadian viewers, but more importantly, it's the first day of the second half of 2024. Now, with that being said, we got production report out this morning from Bitfarms right on time. We also got a business update out from IREN, so a number of nuggets within those reports to go through, and we're now getting a pretty clear indication of which companies are going to hit, miss, or exceed their mid-year mining growth goals. Now, before we get into all that, please take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below which of these miners you're currently holding, your thoughts on their performance and growth in the first 2 quarters of 2024, and your outlook for the back half of this year. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, a lot to go through. It's July 1st, so happy Canada Day, as I alluded to in the intro there, to all of our Canadian followers. But more importantly, Anthony, it's the first day of the second half of the year, meaning that we should be able to get a good idea of where these companies are at in terms of their growth targets for the first half. So Anthony, how are you doing today? What are you doing for Canada Day over there?
Yeah, we're cheering on with you guys, but most of us are working in the UK because we don't get anywhere near as many holidays as you guys do. So, but yeah, good luck.
Fair
Take it
enough.
all you can.
Excellent. It's also another big day. It's my birthday today, guys. So we're looking forward to having a Canada Day long weekend here, but we wanted to get on. We wanted to provide an update. Anthony, we got Bitfarms production report bright and early, just like every other month. There was definitely some key nuggets in there. We also got a business update from IREN, and we've got a pretty good understanding or lay of the land now in terms of how these companies are looking for the back half of the year. So maybe let's start off with the big one. We got Bitfarms production report. They finally seem to have turned the corner. They came out with 189 Bitcoin for the month, which was well ahead of May. Plus, they came extremely close to that 12 exahash target, which I'll let you get into next.
Yeah, so a lot of these miners have some big mid-year targets to achieve, and we've already seen the likes of CleanSpark achieve their target. They came out with an update late last week to say they got their 20 exahash, so well done to them. Bitfarms had a target of 12. Now, bear in mind, a couple of months ago, they were still hovering around, 6.5 to 7 exahash. They've actually got it to, in terms of installed machines now, at 11.4 exahash. So they come up 600 petahash shy. And there were a few reasons for that there. Some of the weather conditions in Paraguay didn't help them at all to get to their target. So they put a note there to say they'll fully expect to achieve that increase in July. With regards to 11.4, they haven't got all those actually energized at the moment. They've got about 10.4 of those, so there's still an exahash to energize up, plus the 600 petahash. So even though that target is a really good target, you'd expect the July numbers to be even better as this hash rate now starts to grow and starts to get closer to where their end of year target is, which is 21 exahash. In terms of metrics, what we look for a couple of key metrics during the month. Their average operating hash rate in May was 6.4. The average operating hash rate in June was 7.6. So probably lower than people were anticipating. Bear in mind they had installed about 9.5 exahash as at the end of May in their last update there. So they were still having to try and get some of those machines energized. But the production of 189 was 33 more than it was in May 2024. And actually what Bitfarms also show from their updates is what happened in June last year. Well, June last year, even with just 5 exahash average operating exahash, they were achieving 385. So the difficulty in the last 12 months has massively reduced the ability for some of these miners to produce Bitcoin.
Now, Anthony, interestingly enough, speaking of difficulty, we just talked about that on our last live podcast. I saw Core Scientific, they were putting up some daily production in the 12s, which is abnormally low for them. And another similarity to Core Scientific, Anthony, was a big announcement in this production report from Bitfarms talking about some HPC exposure or opportunity for the company. So I wanted to get into that portion of the press release as well.
Yeah, so as everyone's aware, they did purchase a facility in Sharon, Pennsylvania. It was a 120 megawatt site, and it's strategically placed within the Pennsylvania, New Jersey, Maryland interconnection. So, and that's one of the largest wholesale electricity markets in the US. So it gives them the access to really, competitively priced energy and the opportunities to participate in demand response and curtailment programs, similar to what some of the big miners in Texas are available for. So, a case of when you power down at certain times of the day, you get rewarded in reduction in energy costs, and then you can curtail where the price starts rising through demand, and maybe sell some of the energy back to the grid at the same time. So that's open there, but one of the outcomes that we've seen here, I mean, we were only discussing last week that there were 4 now big miners who are focusing on being a pure play Bitcoin miner, and now Bitfarms have announced in the update today that they're now actually looking at maybe using the Sharon site for high intensity computing, which includes HPC and AI, artificial intelligence services. So this is a new change in direction for Bitfarms. It's not totally unexpected. The announcement from Core Scientific, 4 or 5 weeks ago, when they announced the CoreWeave deal on the 6th of June, really changed this whole market. And since that date, then we've seen other miners really put a lot of updates out in terms of what they're pursuing, the number of calls they're receiving from companies seeking, data centers located close to renewable energy. So these miners now are starting to have to think about strategy going forward, how they're going to, deliver revenue streams, and if they can get revenue streams similar to the revenue streams that Core Scientific are going to receive per megawatt that they're providing for HPC. This is quite substantial at the moment, and we've discussed this on previous podcasts. At the moment with the Bitcoin price between 62 and 63,000, those miners that are in the HPC space are certainly able to get better returns than mining is at the moment. Not to say mining in the future, if the Bitcoin price rallies to anywhere near some of those prices that our good friend Freedom by 40 was suggesting on the live podcast last week, we could see a swing back to Bitcoin mining being the more profitable. But at the moment, that HPC is more predictable. Wall Street like that sort of type of contract, and Bitfarms, are joining that there, and they've just purchased this site there, which gives them an opportunity to look at the HPC as well as the Bitcoin mining and determine a way forward. But it ticks all the boxes, that site there, and it was a good acquisition. Another quick announcement on Friday, they announced another director to the company. So Fanny Phillip, who was the previous chief operating officer of SATO Technologies, has joined the board as a non-executive director, and she'll be a great asset to the company. She's got experience in this place there. She's a finance background like myself, and so she'll bring a lot of experience to the board there. And having just lost one of their directors through the vote, they've now reappointed another director who's got a significant amount of experience in the Bitcoin mining space. So look forward to seeing Fanny at the conference in Nashville. Have a catch up there. I've met her a few times before. So when I was working with Romain at SATO there at previous conferences. So yeah, she'll be a really good asset. But yeah, overall, not quite reached the target, but a good update from Bitfarms.
Now, Anthony, the question really that remains now is how many pure play miners are left out there? We've got CleanSpark, we've got Bitfarms has now converted over. Riot is still obviously pure play along with CleanSpark. And Marathon, I don't know if we'd categorize them as pure play anymore with the addition of the Caspa mining now, eh?
Maybe Casper just took them away from that pure play mining. Let's leave that one to the Mara Pigs because they're the ones that sort of advocated Marathon Digital being the only pure play man that people should be interested. So we get good to get their views. That's the ones that haven't blocked, which is probably about 10.
I think so as well. So really thinning the herd, you guys, in terms of the pure play miners out there, 2 or 3 left, depending how you want to look at that one. But really starting to see this HPC phenomenon take over the entire industry on the backs of that game-changing core scientific news. Now, we also got a business update out from IREN here, Anthony, so we can run through that one. No production numbers, but good sense of growth, stating they're now fully funded all the way through 2024 up to 30 exahash, which is extremely bullish for the company. What are your thoughts on that one?
Yeah, I read through the update, and firstly, I was surprised we had an update today. Maybe it's just a case of let's get some more good news into the market. But actually, reading through the update, the most significant part of the update was actually in the footnotes. So, having read the whole update there, and they talked about increasing their cash on the balance sheet. As at the end of June to now 425.3 million. We know they had no debt, so they've not incurred any debt in the last quarter, which is good. And bear in mind, we're reporting this as at the 30th of June. So effectively, we're talking about this will be their latest quarter numbers when they get released. When they're due to release in the next month or two. So, the target for this year is 30 exahash. They already achieved their mid-year target of 10. That was achieved in May. So they were a month ahead achieving that target there. We've seen the photographs coming through from the Childress site showing the current progress of getting those facilities, those 25 megawatt facilities in play there. So they're going to have to build quite a significant number of those to get to 30. But looking at the progress now and the learning curve that's been applied to that from things they found out building the first 4 or 5 of those buildings, and now using that knowledge and rolling out significantly more at a far greater pace. And I've said before, I expect them to get to 30 exahash by the end of the year. It's all on one site. They can just increase the number of personnel on the site if they start falling behind. But with the good updates that they're bringing out on a regular basis, I expect them to achieve that. They've also got a target to get to 40 exahash in the first part of 2025 as well. So again, they're ramping up. They've highlighted again this. They've got another facility that they can. They have potentially about 1,400 megawatts of power in West Texas. Now, we do know, having ourselves been to Corsicana, the length of time some of these sites take to be developed from breaking ground. And we haven't had a date for breaking ground on that site there. So we'll look for them updates to come out, because once the breaking ground occurs, it can be it could be 18 months, 2 years before you start seeing any real progress in terms of mining on these sites. These are big sites. They'll need to, they're already buying the power equipment required for these sites, because the lead time on that type of supplies can be 12 to 18 months required in advance. So they're doing everything at the right speed there. Bear in mind, Childress is still, 600 megawatt site. And at the moment, they're only using a fraction of that. They're probably up to about 120, 140 megawatts of that in operation. So they've still got significant amounts of that site to fill out. And even when they get to 30 exahash, there'll still be capacity in that site to go further. So this 1,400 megawatt site is the next big project. But when you go down to the footnote in the actual in the update there, and it talks about how they got the cash to that level. Now, bear in mind, they do sell the Bitcoin on a daily basis. But what was interesting was they actually raised between the 15th of May and the 28th of June. So in the space of about 6 weeks, the company raised 413.4 million. in proceeds from selling just under 40 million shares as part of their ATM. So if you're looking at that number there, literally raising just over $10 per share for a 6-week period, raising 400 million. Now that obviously helps to get what they require to do this year, maybe early next year, all paid for in advance. In a similar way to the likes of some of the other big miners as well. We know CleanSpark have done the same. We know Riot Platforms. We know Marathon Digital have been literally using their ATM, effectively like an ATM and drawing cash out on a regular basis from that ATM. So now we know that the total number of shares outstanding as at the 28th of June for IREN is 186.8 million shares. So that 40 million added on to what they highlighted in their quarterly update, that takes them up to 188 million. If you look at the share price today, the share price at opening today,
they're up about 7%, Anthony. They're at 12.
It's up 7% today. So at $12.15, you're looking at a market capitalization probably about over 2.3 billion with that amount of shares. Incredible. And the interesting fact now is they're en route now to probably overtake Riot Platforms in the not too distant future, unless we see the Riot Platforms update this week come out and highlight their growth to 20 exahash as they expected. So that'll be interesting play there. But Riot's been losing a little bit of ground on the likes of CleanSpark and Marathon. IREN have been doing something not dissimilar to what CleanSpark did in October last year and have really ramped up since the announcement of them going to 30 exahash this year, and also having this HPC business as well on that, which they're looking to grow. And this site that they've got to develop, the 1,400 megawatts of power, that's open to everything. So they could do Bitcoin mining on there, they could do HPC on there. They're very open to effectively probably what the best return could be by utilizing the power on that site there. So it's interesting now the miners are really not just focusing on the Bitcoin mining, they're looking at everything else to try and ring a return. And if we remember the podcast we had with Sam Tabar, 100%, they'll look at every option and look at the return there, and base decisions on the return with the information known as today's date, not just guessing what the future might bring. So that was really interesting to see one of the big miners actually explain, their strategy in pretty much clear terms. Not necessarily seen that from all the miners, but Sam's been very, very vocal about HPC since the day they signed that contract, and they were the first miner to do that. And you can only see that contract has been going from strength to strength. It's going to be at 92 megawatts in the next few months, 92 million. And they've only got 8% to go further to achieve their target for this year.
Yeah, it's exciting. I can see why Sam's been talking about the contract so much and why so many of these other players are now getting involved in that space. Very exciting dynamics in the Bitcoin mining, or HPC sector, as we should call it now, Anthony. Great to see these companies coming close or exceeding these targets. As we've talked about in prior years, you guys, this sector has been notorious for missing targets or setting targets that are a little bit beyond reach. But it seems 2024 is the year that a lot of these growth goals and exahash goals are really coming to fruition. So we'll continue to keep you guys posted as production reports come out, Anthony. But generally, feeling pretty good. The market looks pretty green today. And considering the price of Bitcoin and the share price where a lot of these miners are trading, I think a lot of us are feeling pretty good about this decision, despite maybe hoping that Bitcoin would be a little bit further down its bull run at this point.
Yeah. And actually, if you think about yesterday was the closing date for the second quarter of 2024. So the Bitcoin was sort of between 62 and 63,000. So even if we give the benefit of 63,000 for the end of the quarter, that's still $8,000 a coin less than it was on the 31st of March. And think about all those companies that have got sizable hodls on their balance sheet. Under the FASB rules, they're going to have to value that Bitcoin, the valuation down now, as they'd increased it on the previous update on the balance sheet. So, 8,000 per coin and you've got 17, 18,000 coins on the balance sheet, that's going to be a significant hit to your balance sheet. Now, we're going to have this volatility in terms of quarterly reporting. The key thing, that we look at is not necessarily the valuation of Bitcoin. It's actually being able to mine profitable from a free cash flow perspective. So we've always looked at, in my last 2 or 3 years of analyzing these, I've always looked at the cost to mine a Bitcoin. And in terms of cost to mine a Bitcoin, I've never really counted the valuation of Bitcoin or the depreciation or the stock compensation. Bear in mind, they're all real costs. So, but when you're looking at cash, it's what cash comes in, what cash goes out that makes a company viable. And so we've always looked at the term free cash flow is a way of looking at that. So what will be interesting to see is how many of these miners can make net return on just cash. And it'd be interesting, looking back at the Q1 before the halving, if you'd have taken out some of those increased valuations for Bitcoin from some of those income statements, they wouldn't have been as green as they were showing there. In fact, some of them would have been red, and so that's something to be cautious of there. It looked like there was some really high additional costs that were used in Q1 based on the fact that some of these companies knew that the FASB rules would allow them to price all their Bitcoin at the highest rate there. And looking at some of the G&A costs and the stock compensation that went out in Q1, there were some significant numbers. And we'll see what that looks like in Q2 now, when it's the reverse of that effect. See how many miners put in, really, really large stock compensation numbers when they're not making the profits that they were, assuming in Q1. So that's something to keep our eyes on. If Bitcoin price goes to 200,000 or whatever in the future, then these conversations, are probably less relevant. But they are relevant now because companies have to be viable, and we look at the money coming out. We look at the fact that these senior managers are well paid. And before we even start looking at stock compensation, extremely well paid across the board. We know that because it's open and transparent. We know how many, millions they're getting paid every year in salaries and bonuses, and stock compensations on top of that. So that'd be something worth to review when they come out.
Interesting point, Anthony. You mentioned the Bitcoin price is about 8,000 lower than the 71,000 it closed Q1. So we're looking at about 11% reduction in the value of HODL for these companies. What's going to be interesting to me, Anthony, is how the market reacts, because by the time these Q2 numbers come out, Bitcoin may be well above or well below this number. So it'll be interesting to see how this all shakes out, but definitely a different tune than what we heard from Q1 in terms of the FASB accounting rules. So we'll continue to keep you guys posted there.
We are entering this period now where in previous cycles the Bitcoin price has it's begun to rally sort of 60, 70 days after the halving. We're going to be close to getting to that period now. And we talked about that before about 2 to 3 months. Maybe months 4, maybe months 5, if it takes a bit longer. But now we're starting to enter that sort of period where the Bitcoin in previous cycles has rallied. And actually this year, if you think about all the positive news this year, surely, the rally is more certain in previous years because we've got the likes of the ETF funding and the amount of investment these ETF funds have done by buying Bitcoin. Thousands of more Bitcoin being purchased and been produced in that period of time. So they're having to, go out there and pay for Bitcoin, effectively getting people to sell Bitcoin because there wasn't enough being produced to warrant their requirement.
Yeah, it's a great point. It's going to be a very interesting couple quarters to watch here, Anthony. As you say, that Bitcoin 4-year cycle is really starting to be primed up here for a move. So we'll continue to watch that, you guys. Never a shortage of news in this space. We've got the first production report out from June. We expect to see a bunch more of those this week, and we'll continue to cover them. Anthony, thanks so much for your time today. Happy Canada Day, and we'll see you back here tomorrow.